All right, welcome back to a market model review. Today we have a full MMXM breakdown. As always, these are just my interpretations on price. Shout out ICT, let's get straight into it. So we have a both buy model and sell model, and as we know, that forms the full market maker model. So here, this is the market maker model that we had, and we're going to end up breaking this down. So as we see here, we have an original consolidation. Then we have a break from the original consolidation, or we take liquidity. We take buy stops here within this balanced price range, and then we displace lower. We get displacement, and then we redistribute into a new day opening gap. We redistribute again into a new day opening gap, and then we create a low. We generate a low right above a higher time repeat rate. That is exactly what we want to see. So a low gets generated right above a higher time repeat rate. Then price comes back up into that new day opening gap, and then we slide back into, or we take this sell side, and now we have a breaker. So now a breaker has been activated. So it would be this up close candle, the last up close candle here. And as you can see, that gets respected if you draw that out in time. We also have mitigation block right there, mitigation block right there. As we see, minor sell side taken. And then here, right here, price changes its state of delivery. We then have a balanced price range on the lower time frame. As you see, fair value gap in, fair value gap out. Then we come back down to a 5-minute volume balance. We don't really have a 5-minute fair value gap here, but we will drop it down to that lower time frame. Volume up balance on the 5-minute looks to get repriced to. Then we have expansion right here within 1150 macro. And note here, the 1050 macro starts this turning point. 950 macro, we kind of consolidate a little bit, and we kind of retrace back up to have, or we distribute lower, then we come back up to new day opening gaps, and then then deliver to the sell side and into this higher time PD rate. Then we have a change of state of delivery, price change of state of delivery, and as we see, we enter our buy program, and look at the new day opening gaps getting respected perfectly. And as we see, we don't end up taking buy side here, we just end up repricing to this new day opening gap. So we work within this dealing range high to this dealing range low, but we actually don't end up taking that high until later on. We end up reaccumulating and then taking buy side there. So let's get straight into it. I wish I did a slideshow, but this is what we're working with. So as we see, 9:30 open, we have 8:30 high impact news. We come up, we take the high, the dealing range right within that new day opening gap, and then we form low resistance liquidity. We're consolidating right before market open. This is just time distortion. We're waiting for market open. We come in, pop up into open, and look at this mitigation block right there. Reprice right to fair value gap right here, and on the 5-minute, that was a balanced price range, and this is what a balanced price range looks like on the 1-minute. Price shouldn't really want to violate this balanced price range because we've already done what we needed to. We've offered fair value into the market. We come into here, boom, displace lower, new day opening gap right there. Perfect. Then we come back in, get another entry within that 950 macro here, and there isn't really a PD right here because it's a new day opening gap. That's the hidden sauce. New day opening gap's the hidden sauce. And then we come back lower up into the new day opening gap. And notice here we disrespect this imbalance. This could have been something. We're in a deep discount here. And then we come back up into that new day opening gap. And then here's the smart money reversal. We get a low generated right above a higher time PD ray here. And then we dip into that right in that back end of that 1050 macro, and as we see here how that new day opening gap's respected, we have an order block right here. As we can see, we end up displacing lower, and we're manipulating into with speed. That's what we want to see. We want to see speed into the PDA, and we want to see speed out of the PDA to show the intention. As we can see here, we have a 5-minute order block right here. That's when we actually change our state of delivery to buy side delivery here, and as we see, we're below true day open here, and we're below 8:30 opening. As we see here, this actually is ES, and look at ES, new day opening gap, new day opening gap. Look at that respect right there, and then this also is another new day opening gap. I don't know, you can come to your own conclusions. I'm just going to bring my evidence of what I see within my back testing, and then as we see, this is the higher time frame PD ray that we are coming into. We have these two down close candles here, and notice this market maker model is the formation of an hourly order block. This is what it looks like on the hourly. As we see, we come down into these two down close candles, and now we're creating another propulsion block within the market that we could see some more accumulation within. And notice this is happening below true day opening and 8:30 opening. And as we see here is the 1 minute chart on NASDAQ. Here we create a balanced price range, fair value gap in, fair value gap out. We have an inversion that we tap right there, and then we get displacement higher, and then we have this inversion right here. We end up reaccumulating within. And as we see, we come back down here to this propulsion block right here. This is your order block, propulsion block right there, supporting price. And look what we do here. We have a stop hunt here. We reprice that 5 minute volume balance. We get displacement higher. And notice what we have here. We have relative equal highs within this. So this in itself is a fractal market maker buy model. So what do we have here? We have a market maker model within an already existing market maker model. If you go back to that dealing range high to that dealing range low, this is just working within that. Then we come up, we take relative equal highs. So you see the respect there. And here we can swing grade this. I know this is kind of a lot, but from this low, dealing range low to this dealing range high, here we can swing grade this at 25%. We'll expect our low risk entry. At 50%, we expect to see consolidation. That's exactly what ends up happening. We're a stop hunt here. And then we end up seeing silver bullet within that 75%. And notice this fair value gap happening around the 50% of that dealing range. Measuring gap right there. As we see right here, we have a fair value gap that gets reaccumulated within here, within that 75% range right there. As we see here, that's a 25% gap right there that we never really head back into. And as you can see, we have some precision right here with the standard deviation at -4, perfectly aligning with constant encroachment of that new day opening gap that gets repriced to right there. And then as we see here, we have a 1250 macro. We end up offering mitigation. We have a 5 minute breaker. We have this these two down close candles, 1250 macro. We slightly displace below this. We reclaim this for value gap right there. And then we end up seeking buy side delivery here after the end of that into that new day opening gap. We come back lower here around 215, 230, and then throughout the rest of the day we end up taking that high. So here we have some swing grades, and I forgot to include the rest of this to when we take buy side. But as we see here, where do we reprice right to? This imbalance right here, also new day opening gap high. I don't know, man. I don't know. Like that to me, just seeing that happen, and it happens over and over again, just is beautiful. And as we see, we have this doing range high to low. I use the bodies for this, 25%. Where do we get? Low risk entry, 50% consolidation. Stop hunt here, 75% silver bullet. And then we get that silver bullet up to that right there. And then as we see here, we have standard deviation from this low to this high. -1 gets respected perfectly. Look at that. And then as we see here, -3.5 gets standard deviation. And then I think -4 gets respected. I don't know why. I thought the market maker model ended here, but it didn't. And now we have full market maker model. We have original consolidation. Also another original consolidation. Remember, it's fractal here. Distribution, accumulation, and then more accumulation over here. And then the time it takes to complete this model. And I let's hop into this real quick because I don't know why I didn't include this, but yeah, we end up taking buy side here around 4. Notice 4 puts in the high a day, 4 p.m. Then I also want to throw up these new week opening gaps right here. New day opening gap right there. Gets repriced to at 315. Market on close macro. We end up repricing the buy side here. Putting the high day in at 405. So we end up taking this. So this actually should be extended, and I apologize. I don't know why it was bugging like that. And as we can see, 4 hours to complete it, 2.5 hours, or 2 hours 45 minutes to generate it. And that's the market maker model.